Hey folks, I have it at 10 a.m., so I think it's time to get ready and get rolling with our presentation. Good morning and greetings from Manhattan, Kansas. It's kind of chilly today. Spring has been dragging its feet a little bit, but otherwise everything looks pretty good around here. I know we've got folks calling in from all over the state and out of state as well. So again, thank you for joining us. We're going to go through the slides and then give you a chance to ask some questions at the end on anything that you're thinking about. And so that will be in the chat box where you'll have a chance to type your questions, and I'll just answer them in the order that they come through to me. So let's get rolling. My name's Mykel Taylor, and I'm an associate professor in the Department of Agricultural Economics at Kansas State University. It'll be 8 years that I've been here in August, so that's been a really good run of seeing some interesting things in the farm economy and how they've translated into Kansas land values. I've seen some ups and some downs. So let's get rolling and talk about some things that we're seeing right now and going forward. So let me see if I can change my slide. Here we go. Okay. So I want to talk about some current economic conditions, take a few slides just to let you kind of see where we're at using some Kansas Farm Management Association data. And here, this is returns to wheat, corn, beans, and milo for north central Kansas, according to Kansas Farm Management Association enterprise analysis. And what I'd like to point out is that we had a period from 2000 to about 2007 where returns were either a little bit negative or right at about break even for the average farm. And that's kind of what we expect in the long run. Is profitability is zero at the margin for that average farm. But you can see in 2008 we started making quite a bit of money, and returns were above $50 an acre for a lot of years and a lot of crops. Then starting in 2014, things fell rather quickly. Hold on just a second. I can't hear at all. Be sure to speak into the mic. Okay. When you turn your head, I can't hear. Right. I want to make sure that everybody can hear what's going on. Rich, can you give me a real quick sound check? Coming through fine. Okay. All right. Sorry, I didn't mean to interrupt. I just want to make sure everybody can hear me. So in 2014, things turned around very quickly, and we went from making money in and around $50 an acre to losing $50 or more an acre on several of our crops. And that went for several years in a row, all the way through to 2018. The exception is 2016 soybeans. And then again, we have a positive impact here in 2018 with soybeans. And what you can see there is that soybeans, the blue bar for 2018, is at about a positive $40 an acre. And I think it's worth noting that when you look at the data from Kansas Farm Management Association, the MFP payments equal about $80 an acre. And so without those MFP payments, soybeans would have been a negative $40 an acre. So some interesting things going on here that are keeping things afloat for the MFP payments, but they're very short run, and so I don't necessarily expect those short run impacts to carry into the land market in the long run. Okay, Yes, here we go. We have net farm and ranch income from 2008 to 2017. The 2018 data from KFMA for the whole state will be available in another week or so. So watch for that on agmanager.info. The information will be released, and that'll be really important information to look up for whatever your region might be. sorry. The story here is much the same as it was for the crop enterprises for north central Kansas. So this is statewide, and what you can see is from 2008 to 2014 is we made really good money in the crop sector, and 2014 was also a huge year for the cow-calf sector. Things fell off very dramatically, very quickly in 2015 to a statewide average net farm income for the cropland side of about $5,500. And that's total returns for the entire year. So that was a stiff wake-up call for producers. And there's been a slight recovery. The average now is, for 2017, was about $65,000 an acre. But that varies quite a bit by region of the state. What you can see here is the variability across the 6 KFMA regions and what the net farm income was in 2017 for those regions. Now, we don't expect cost of production to vary dramatically across regions of the state, and we certainly know that commodity prices are not going to vary too much across the state, even accounting for basis. But what does vary and what will affect net farm income and cause this variability between regions is yield. So with these commodity prices, if we have a good yielding year, we can have a pretty good net farm income. If we have a poor yielding year, then it can be really devastating. And so we really want to keep in mind that yield is important here in this farm economy and these conditions. This is a chart that shows the distribution of farms and how much money they made in 2016 and 2017. And what you'll notice is that 31% of the farms had negative profitability. That's a pretty decent chunk of farms, both in 2016 and 2017. The other thing to notice is that if I increase that band and take in the next group, the 0 to 50,000, that's actually about 60% of my farms. And that's important because 60% of my farms made less than $50,000 last year, or in 2017. And in 2017, the average for total family living expenses was $68,000. So 60% of the farms made less than what it costs to cover their farm family living expenses. So you ask the question, what do you do in those situations where you don't make enough from the farm in order to cover family living expenses? And that's when you start seeing people getting another job, borrowing more money, getting creative with their finances in order to try to make things work and get through one year to the next. And so the other thing that's really important to know about getting that extra job in town is that for a lot of farm families, if they can possibly get insurance, that's an important component of their costs, because insurance is the fastest growing segment in farm family living expenses. So that second job doesn't just bring in revenue, but it also helps cover a major expense if benefits are provided with that job. This is bankruptcies filed by Kansas farms over the last 6 years, and what you can see is it's on a pretty high upward trend. In 2018, we had 35 bankruptcies filed statewide, and that might not seem like a very big number, but it's actually, like I said, pretty large relative to the last few years, and it's the largest we've seen since about the mid-90s. But to put it in context, some people are asking questions about, well, does this compare to the 80s? And I'll give you this chart, which shows you that in 1987 there were 265 bankruptcies filed, and in the very next year there were still 67 filed. So we're not in that same situation that we were in the 80s, although there's some similarities in terms of where farms are at. But I would say financially, we are showing some fragility in Kansas farms with the number of bankruptcies and with the average returns according to KFMA data. And so we want to just keep in mind that right now, good yields are really important to covering the bills in the farm sector in Kansas. So how does all this relate to land values, which is what we're here to talk about today? Well, they're affected by profitability in the ag sector, definitely, but land values don't necessarily adjust as quickly to profitability as profitability does to changes in commodity prices. So we could see ups and downs in commodity prices, and you won't necessarily see land values adjust immediately, but there'll be more of a lag, and it will be mitigated a little bit by other factors, such as the long run reasons that we buy and hold on to land, which, when you talk to the typical producer and they get a chance to buy a piece of ground, they're not going to turn around and sell it in a couple of years. Their goal is to farm it for the next 20 and then pass it on to their kids. So that's important. But the expectations of buyers and sellers will factor into this land market. If people expect that land values are going to be going up and there's a lot of strength supporting that in the fundamentals, then you can see land values go up and vice versa. So we'll talk a little bit about expectations when we get to the data at the end of the slide presentation that you guys, some of you put in yesterday's survey, which was pretty interesting. Where do we get information on land values? We get data from the USDA, or the Kansas Agricultural Statistics Survey. They do an annual survey of land values and give us a statewide number. They stopped doing CRD, or crop reporting district level estimates, in 2013. So we only have a state level number. So let's take a look at those right now, which gives us the ability to look at trends across time as well as where we are at a given point. So these were published in August of 2018. They show us the change in land values from 2017 to 2018. For Kansas cropland, up 2% to a total of $2,010. That's not a real strong increase, but it's better than a downward movement. Remember, these come from surveys. So they survey landowners and farmers and ask them where they think that land values are going. And the difference, what most people felt between 17 and 18 was that we would see a slight uptick in land values. For Kansas pasture, the value is at no change for 1280 for a statewide number, which just means that people didn't see land values going up or down for pasture, but instead between 17 and 18 that they would stay steady. This is the change over time in the different classes of land according to USDA. So you can see irrigated ground sells for the most, and then non-irrigated ground, and then pasture. And everything was in a positive trend all the way through 2014 and 2015, and then things started to fall back and have flattened out or slightly increased since then. So you have the returns to, well, sorry, you have the land values showing that there's been some resiliency, I guess I'll say, in the market because things haven't fallen off drastically. This is returns to land values, driven mostly by, this is the ratio of rent divided by land value. And as land values were going up, it was pushing the rent to land value ratio down. It went as low as 2.5% for non-irrigated cropland and has recovered a bit to about 3%. So those are the returns, and you can roughly expect for ground on average statewide. Okay, so to talk about USDA numbers, and I mentioned that they're done in a survey format, and that's really useful because it gives us a piece of information that we can use to understand how land values are changing over time. But as many of you know, if we start talking about cropland in Kansas, there's a huge amount of variability, especially between irrigated and non-irrigated cropland, and there is a big change when you talk about rainfall from western Kansas to eastern Kansas. So what we'd really like to have, instead of a survey, or in addition to a survey, would be market-based land value estimates. And so we have an agreement with the Property Valuation Department in Topeka and the Kansas Society of Farm Managers and Rural Appraisers, and that brings up the ability for us to look at actual sales data. Again, in Kansas, it's a non-disclosure state, so you and I cannot go and get the sales prices of all the ground that's sold in our county over the last couple of years. That's only available to appraisers and realtors and banks. But you and I have the ability to look at this data once we process it here at K-State and turn it into county level estimates. So that's what we're going to talk about today. We have sales data from 2015 through 2018. We know the county in which the sale was located, which allows us to account for things like population density. If you're looking in Sedgwick County, which is Wichita versus Sheridan County out in northwest Kansas, you want to be able to account for population density and alternative uses for farmland when you're in the periphery of an urban area. We know the size of the sale, so that does matter. Larger tracts tend to have fewer bidders because it's such a large outlay of money to buy that ground, and smaller tracts tend to have more bidders, and therefore with more bidders the actual price per acre is higher on those smaller tracts. So we want to account for that. We want to account for the mix of irrigated, non-irrigated, and pasture. Oftentimes when we look at averages of sales data, you're looking at a parcel that has a mix of, say, irrigated and pasture, or non-irrigated and irrigated. And what we can do with these data and running them through a statistical model is give you more of a pure value for that irrigated, non-irrigated, and pasture, as if you had a piece that was solely made up of irrigated ground or solely made up of pasture. We know 20-year average rainfall, which, as I mentioned, is really important for non-irrigated ground and pasture. We know if it's enrolled in CRP. I would like to know when it expires, but I don't know that. I just know that it's got a CRP contract on it, and so that will make a difference depending on what part of the state you're in, but also depending on how close you are to expiration. For CRP ground, it's actually worth more the closer you are to expiration, because it gives people the most flexibility to either try and re-enroll it or to produce on it. So that's an important component of CRP ground. The value of improvements is removed for bare land value, so we get rid of any buildings or houses, and parcels under 40 acres are omitted. And unfortunately, Wyandotte and Johnson counties fall out of the estimation because of these different thresholds that we put down for parcels being included in this statistical analysis. Okay, so here we go. We have 155 is the average parcel size, 2.9% have CRP contracts, and there's an average of 33 sales per county. And I want to point out that that's really important, because oftentimes in a state like Kansas, which is a non-disclosure, we will hear about auctions, or maybe you will hear about the neighbor got, but you won't be able to view the entire market. And so the more sales that we have, the more representative that this is of the entire market, which is going to include transactions that are private treaty as well as auctions. So it's important that we have a good smattering of sales for each county when it comes time to try to estimate this at a county level. Total transactions in 2018 are 3,480. That's up quite a bit from 2017, which was up from 2016. The difference between 2015 and 2016 was almost a 35% drop in the number of sales. And that was huge, because in 2015 we still had people who were optimistic that the land market was going to be okay, and in 2016 we had a lot of people either pulling their ground off because they weren't getting the bids they wanted, or having no sales at auctions, again because they weren't getting the bids they wanted. And so the market really contracted in terms of supply. But we've seen an uptick in supply of ground in 2018, which is really nice for supply. Gives us a few more tracts to sell, but it's also going to have an impact on the land values. Okay, and this is again just showing you land sales overall. They're down from their peak in 2015, but are starting to recover. These are land value estimates at the state level, but from USDA. And I'm going to switch the slide and go back and forth a couple times, but these are the trends that USDA has for us, and these are the trends that that our K-State estimates using the PVD data have. And what you can see is that in terms of the peak being in 2015 and the land values falling towards 2018, that's been the case for both USDA and the K-State numbers. The biggest difference between the two of them is the level. When you look at USDA estimates, say for non-irrigated cropland, they're hovering around high like $1,900 to $2,000 an acre. When we look at PVD data, that number is closer to $2,800 on average. And so what's interesting is that the surveys tend to get the trends really close to what the actual market data says, but the levels are off a bit. Okay, so let's take a look at the land model results. Again, this is taking the PVD data, running it through a statistical model, and accounting for all of those things that I talked about on those previous slides for the characteristics of the land, and then estimating back out what that ground would be worth based on its characteristics. And so this is the model for 2015 to 2018 for non-irrigated cropland. The USDA number is shown on here just to show you again the trend. That is similar, but what we've seen and what's important here is that from 2017 to 2018 we had about a 3% drop in non-irrigated cropland. So a little bit of a drop, but we're adding to an overall decline in land values that we've seen since 2015 that brings us up to about 22% decline in land values. For irrigated cropland, we are down just a little bit, about 4%, but overall the decline is about 27–28%. And on pasture, we're down 1% from 17 to 18, for a total decline from 2015 of about 18%. So what you see here is that the land values in the state have definitely responded to the decline in commodity prices, to the decline in profitability. But the decline happened between 15 and 16, and then the major decline happened between 15 and 16, and then we had more of a smoothing of the land values to a slight decline down in 2018. This is how land values vary across the state. Again, these are non-irrigated land values, and these slides will be available to you on the Ag Manager website, as well as I'll point you to a publication that has county level numbers. It's just hard to read the county level numbers, so I just put the crop reporting district numbers on here so you would get a sense of the variability across the state. For those of you who aren't familiar with Kansas, we definitely have more rainfall in the east than we do in the west, and our highest quality soils are in northeast Kansas, which also happens to be where we have quite a bit of we do have some urban pressure up there, but I would say that the predominant driver of land values up there is the quality of the soils and the productive capacity of that ground. Here's irrigated land values. Again, reflecting some drivers on irrigation, such as water availability. Probably the most decline in the available water is happening in southwest Kansas. So you can see that irrigated ground is actually worth less because people have to pump further distances and deeper in order to get the water that they need for their farming enterprise. And then this is pasture land values, driven much by the same things going on with non-irrigated cropland, which is water, rainfall, and quality of soils. Okay, so we've seen the changes in land values based on the market sales data, and what we've got there, I'll repeat it again, is that we have about a 3% decline in non-irrigated cropland, about a 4% decline in irrigated cropland, and about a 1% decline in pasture from 17 to 18. So let's take a look at how land values compare to, we're going to pick out Iowa, which is sort of the the keystone for taking a look at land values in the Midwest. And what's interesting is when you plot these two things on the same chart, it makes Kansas land value changes look pretty modest relative to Iowa, which has such a high level of land values on a dollar per acre basis. But if I chart Kansas land values on their own axis, what you see is a lot of similarity in the pattern in which land values change between those two states. Starting in 1960 through about 1975, there was a low and slow rate of growth in land values. And then in the mid-70s, things started to really pick up with some good commodity prices and good profitability in the sector. Then by about 1982, 83, things started to fall off, and they fell off quicker in Kansas than they did in Iowa. And so you can see that the curve is a little bit flatter for Iowa than it is for Kansas. But in both states, they lost about 50% of the value that they had earned in a time span of about 6 years, to where we get to about the late 1980s, 1987, 88, and we've hit the bottom of that market. Now, then we go into the 90s and the early 2000s with a steady rate of growth and some upward movement into about 2008, and then things pick up dramatically. And we peak in 2014 in both states and make a downward adjustment. What's interesting is that the land values in Iowa have stayed a little more stable over the last 2 years. This chart does go through 2018, though the axis doesn't say that, but it does go through 2018. And in Kansas, we've seen a decline, whereas we've seen more stability in the land values in Iowa. And one of the things that we've picked up on here in Kansas that I think might be explaining some of this difference here is that high quality land tends to hold its value a little better than lower quality land. Within the state of Kansas, we've seen this happen in the last couple of years with the rate of decline in lower quality in terms of soils and productive capacity losing its value quicker than good quality soils. And if you compare Iowa, which relatively speaking has good quality soils, to overall relative to Kansas, that might be some of the explanation there. So the market going forward, I think that it could have been much worse than what it has been. We've seen a downward movement in land values for non-irrigated cropland in about 21 to 22%. Again, if you compare it to the 80s, we lost 50% of our value. So we certainly haven't had that big of a change. We've seen an increase in the number of sales in the last year, which is showing that some people are getting out there and trying to sell their ground, and they're more willing to take prices for it that they weren't willing to take a couple of years ago. Now, whether or not that's good or bad, you increase supply, it's going to put downward pressure on sales. And one of the things that I'm a little bit worried about is, in talking to some lenders, is the restructuring of loans that went on this winter, and whether or not that restructuring for some folks required them to sell off a parcel in order to get their loans to a manageable level. What that means is that they don't have any choice. They have to sell that ground, whether they like the price for it or not, because they need the cash flow. And so that scenario is one that I can't prove that that's what's going on, but anecdotal evidence suggests that there is some of that. And if that continues, if we have another bad year with low commodity prices, that trend is just going to continue. And as opposed to having a lot of bankruptcies and having that drive prices down, what's more likely is that we have this attrition in sales of small parcels for people trying to catch up with their loans. MFP made a big difference in 2018 in terms of profitability for soybeans, but again, I don't think it's likely to factor into the long run expectations for land values. There's no indication that we're going to get another MFP payment. And so while it made it possible to pay rent and cover some input costs this year, it's not going to be a backstop for next year, or at least we shouldn't plan on it. So I think that that's going to have some downward pressure. It's hard to predict where we're at in terms of trade, interest rates and some things like that, but just the amount of uncertainty in the market, I think, is putting downward pressure on land values, and that in and of itself is keeping things from being ready to recover in the coming year. So we did send out a brief survey yesterday, and I appreciate everybody who responded to that survey, asking you where you thought land values were headed in 2019. I personally think that we're at a stable to slightly down level for 2019. I think that's a fair estimate, just given all the uncertainty in the market. But here's what you folks thought. First of all, where are you from? So everyone watching today, we have a really good distribution of folks from around the state, north central Kansas having the most people show up, but we have 9.9% who are from out of state, probably landowners that own some ground here. And then we have who you are. 27% are lenders, 17 to 18% are farmers and ranchers, 16 to 17% are landlords, and about 37% classify themselves as something else, maybe educators, maybe other types of professions. And so what did you have to say then about the direction of land values? And this probably isn't too surprising, but again, this survey was done before today's talk, so hopefully I didn't bias anybody's opinions. But 28% said down, 19% said down slightly, so that's a total of about 47-48% that's in the downward movement, 26% saying stable, and then the residual saying up or not sure. I think these are fair estimates. I know that in some of the comments that were made when they gave these answers, oh, we have somebody drawing on our slides. Thank you. The thing that is interesting there is that oh, let's see, what was I saying? I think that there's a lot of uncertainty in the market, which is where we have a lot of that, you know, people saying stable to slightly down, but even with the uncertainty, but comments that were made in that survey, people making comments about, you know, seeing some good land sales and some strong land sales in their area, but it tended to be good quality land. The land market being marked by, you know, still having good quality land getting a good price, but low quality land losing price, and so a mixed bag in some areas. I think what's really going to be important here, though, is what happens when we, like I said, we've introduced more supply to the market. We have more sales this year than we've had for the last 2 years, and so that's if that trend continues, then we might see some downward movement in land values. Okay, so these are some links to online resources. So we're getting ready to wrap up here and give you a chance to ask questions, which we'll take questions as long as you have them. And what I'd like to point out is we have 2 new publications, the 2018 Kansas County Level Land Values for Cropland and Pasture, which is what I made those maps out of. The county level numbers are available in that publication, which is on agmanager.info. And then we have our new publication, which is a cooperative effort between K-State Ag Econ and the Kansas Society of Farm Managers and Rural Appraisers. And that is the Agricultural Land Values and Trends book, which you can get, and that will show you sales averages and some mins and maxes and numbers of transactions by region and county within the state. So that's a really good resource to take a look at where land values are going. So I would encourage you to look at both of those publications if you're interested in knowing more about land values, and I'm available to be contacted for both of them if you have questions. Okay, so I'm going to pull up the chat questions and go backwards. And see what we've got for some questions. Okay, so those are the questions we have. an analysis on cotton in south central and southwestern Kansas. I'm not sure that we have that in KFMA. We do have some crop budgets that give you a sense of what that price is, or what the returns could be with expected yields, but I'm not sure to what extent we've got cotton in KFMA. That one I'm going to have to check on. Regarding Kansas land values, what do you consider large versus small? Okay, so I told you in terms of acres, our average was about 155. Small would be about 80 acres. Large would be about 250 to 300 acres. Let's see. In addition to farmers selling land to pay down debt, are you hearing of farmers taking early retirement instead of filing Chapter 12 bankruptcy? So that's a great question. I have heard a little bit of that. I am sure that there are more people who are opting to retire or get out of farming as opposed to filing Chapter 12, with only 35 across the state. But in terms of bankruptcies, I think that we've got more financial, we're more fragile financially than what that number would indicate. And so, yes, we can't observe all those folks that retire because they don't want to keep losing money and losing the equity that they have in their farm or ranch. Keith, valuable reach, totally understand it. However, why does Jewell County pasture price of 1935 down just 11 acres seem totally unrealistic? Most people would say there's no pasture that would bring that much. I will check into it and make sure that that's not a mistake in the data. What you have to keep in mind is the estimation says if there was pasture available, then you would have that kind of number. And if there's not much pasture available, then in some respects you might have higher prices, and if there's a lot of pasture available, you'd have lower prices. I don't necessarily believe that these numbers are the end-all be-all of what land values are in the state. They're based on the actual sales, and so I think we've got some validity in that we're using actual sales, but there's a lot of assumptions being made about the land being available for sale when we do this analysis. I had someone ask me why the numbers are different between the two publications, and that's a really good question. The difference between the two publications, they're both based on PVD data. The book that we did with the Kansas Society of Farm Managers and Rural Appraisers simply takes an average of parcels that are at least 70% in one category and uses those as the transaction for that category. So say I'm looking at non-irrigated cropland. If I have a sale that's at least 70% non-irrigated cropland, then I'll put that into the average. If it's 50% non-irrigated cropland, 50% pasture, then I won't use it in the non-irrigated cropland. So it omits some of the sales because they're not what we call a Puritan sale. So you get a slightly different number. What happens in the county level land values book is that we put it into a statistical model, and then we say, well, what if I bought a parcel that was totally non-irrigated cropland? What would that be worth? And that's where we're able to estimate what that would be worth based on the statistical model. So it's two different methods of doing the analysis, both based on the same data, but you could make arguments for and against both types of methods, but if you look at them together, I think you get a pretty good sense of what's going on in the market. Rich put cotton budgets out. Thank you very much. Do you see any land simply being abandoned or going fallow rather than losing money on planting a crop? Is there any of the land for rent not finding takers? Good questions. I haven't heard of any land being abandoned or going fallow, but I know we've had, a couple years back when wheat prices were so low, we were grazing the wheat as opposed to taking it all the way to harvest. And we were doing that in north central Kansas, which isn't typical behavior in north central Kansas. That's more what we see in south central or in Oklahoma. So I know that some things are changing. I think that we don't have enough farmers who know exactly what their returns are on a field by field basis. If you did, you would be able to figure out whether or not that farm really needed to be planted this year, and whether or not it was worth it to do it based on expected prices and yields. But it's really hard when we've got our machinery cohort in place to not plant a field, even if it looks like we might just break even or lose a little bit of money, because when you're not using your machinery, when you cut back on the number of acres, that increases your average costs on the machinery side. But the question of, is there any land for rent not finding takers? Yes, we definitely have some ground that is people have been walking away from, and landlords, looking for somebody new and probably not finding anybody who's willing to pay as much as what they want. So I know there's adjustment going on in the rental market there. Do I see commercial industrial hemp affecting land values going forward? That's an interesting question. I think that it will be something that we can put into the crop rotation, but there's such a learning curve going on with how to produce hemp, and how to produce it in Kansas, and what we're gonna put on it for fertilizer, and what's the optimal seeding rate, and there's just a lot of that. So I think it's going to take some time before it has any impact on overall crop rotations and therefore on land values. The data that I have reflects sales in all of the areas. I don't break out Flint Hills pasture from say other types of pasture. So if you're looking for Flint Hills pasture land values, specifically, you can look at the values for those counties, but you would probably have to talk to an appraiser if you wanted something more specific. Okay, Matt, has any work been done on the effect of nearness to end processors, mills, ethanol, feedlots, etc., to local land values? Yes, we're actually conducting some research on that right now, and we found a couple of things. One is that nearness to contained animal feeding operations, or CAFOs, which would be feedlots or dairies or other types of animal enterprises, does have a positive impact on land values. The research is not done, so I can't tell you, the exact percentage increase. And then we've got another project that's looking at just the effective basis, which is affected by mills and ethanol and feedlots all together, and that is also finding some positive impacts, but we're in process with those. Average. Okay, so in the county by county data, does it say somewhere in the report how many sales went into a county's average? That's just where I gave that summary statistic on there being about an average of about 33 sales per county for the analysis. Okay, is the lower average net farm income in north central and south central areas likely based on the feasibility of smaller operations due to the availability of off-the-farm full-time or part-time employment to a family member? I would say it's driven mostly by the yielding conditions in those two areas of the state, as opposed to the size of the operations, because we've got small operations in eastern Kansas as well, and their returns were still pretty good. So I would say that the lower NFI in north central and south central is a result of production conditions. Has any research been completed on irrigated land sales in Limas and Igucas and the reduction in water available per water right? Yes. I don't have that on the top of my head. If you have a question about that, go ahead and shoot me an email and I will put you in touch. Nathan Hendricks has been doing some work in that area, and we would be able to help you with that. Oh, and the values for 2018 irrigated land values chart are missing for several CRDs. Can you tell us what those are? I can't, because there was an insufficient number of sales in those regions, so we just can't estimate what those land sales were. We're real careful. Irrigated land values are very hard to estimate because we have much fewer sales to work with. That's a little bit of a challenge. So no, I can't give them to you for the missing CRDs. Sorry about that. Any evidence of Kansas bankers forcing sales of certain assets like land? I'll just say that when I talk to bankers, the reality is there's a lot of restructuring going on for producers. It's important to know that research by Alan Featherstone from the 1980s showed that you didn't necessarily have every farmer in the state suffering in order for us to experience the downward trend in land values that occurred. It really was in the tails of the distribution, small percentages of farmers having a lot of trouble. And so we have to keep in mind that you don't have to have a wide swath of people being forced into selling their land that would cause this. We can have it happen with a relatively small number of people selling their ground. So I'm not going to say that I don't have any evidence that bankers are forcing the sale of land. I just know that they've been talking about restructuring, and with that there's the good chance that for some folks selling a piece of land is going to be their best option for getting that loan into a manageable level. Are you hearing more or less about property taxes on tillable? We now average $20 an acre on dry land tillable, and after several years of little or no profit, some landlords are increasing their complaints. Okay, great question. So when are property taxes going to start to back off? I think we've got another year or two of high to slightly increasing property taxes, and then things will start to slow down. At the state level, I can't say what it's going to be for individuals in your own county or school district. We have a webinar by Alan Featherstone from last year where he talked very specifically about the property valuation for taxes and how that works. It's a good webinar if you have questions about taxes, and that's one that I would suggest that you go out to Ag Manager and look up, and we're trying to get him to do an update on that webinar as well, which might happen in the next month to 6 weeks. Thank you, Rich. And from Dwayne, are farmers having to compete with oil fracking for water in some parts of Kansas? You know what? I don't know the answer to that. I guess it would be quite possible, but I don't have any inside information on that. Okay, from Doug, does your county level land value document also present rental values for different types of land? No, we keep that separate. So we have a section for rental rates. USDA does rental rates every 2 years. And again, they do it on a survey where they ask folks what they pay for ground. And so you can look at the USDA numbers. And then we have a publication that is sort of complementary to that, where we calculate what we think somebody can afford to pay for ground, not necessarily what they're paying, but what they can afford to pay. And that publication really gives you a sense of how difficult it's been over the last several years for farmers to cover their rent payments based on expected profitability. As I said, let's go back to the example with soybeans. If you put in the price of soybeans and the expected profitability in 2018, you would have had a tough time making it would have looked like you were going to have a tough time making your rent payment. The MFP came in, made it possible for rent to be paid. So the actual outcome was different than what we expected, but that expected number for rental rates is pretty useful in understanding just how challenging it is for producers to try to take that low level of profitability and cover all of their expenses, including rent. Okay, so from Jared, have you looked into charting sales of parcels based off soil type versus location across the state? That's a good question. No, I haven't. We do have a project that we're working on right now where we are taking soil type and categorizing parcels into high quality versus low quality and looking at the average sales price. And as that worked, that's where I got the information that said that, oh, okay, it looks like high quality land is holding its value a little better than low quality land, because when you split it out by soil type, that's where you see the differentiation in sales price based on profit or based on productivity. So when we get that project done, we'll definitely put that out there for folks to look at. You guys are asking great questions. Feel free to keep asking. I will stay as long as you have questions. You're very welcome. Okay. And Rich is giving out my email, so that's good. If everybody wants to send me some questions privately, that's fine as well. I think that we're winding down, so I think that we'll go ahead and call it good for today. But again, I really appreciate you tuning in for today's webinar. We are recording it, so thanks. To everybody for tuning in, and make sure that if there's anybody that you know that would be interested in hearing this, that they know that we've recorded it and it's going to be available on agmanager.info. Okay, so thank you very much, folks. I appreciate all your comments and all your thank yous.